What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be reviewing Carnival Stock. This is the third time I'm reviewing Carnival Stock in the past month, and what a wild ride it has been. It's the largest position in my simulated portfolio at about $12,000 worth right now, and it's about the second biggest position in my real life account. The only thing that I have more than that is Amazon stock. I don't have Amazon in the simulated account because I bought it before I started this YouTube channel. But before I go over my past trades and the trades I did today, let's see what Carnival stock is doing now. Currently, Carnival is trading at $15.55. That's 13.67% higher than the close of yesterday. If we look at just the 5-day chart, you can see that CCL has quickly risen from about $10 all the way to over $15 today. So now the obvious question is, why the recent rally? Has coronavirus all of a sudden gone away? No, cruise ships are still halted and no one is taking a cruise anytime soon. But the main factor that is driving prices up is that the government bailout program has been announced. The exact details are not quite confirmed yet, but it's about $1,200 to all Americans and then many more billions to the big corporations. All told, the stimulus package is about $1.6 trillion. Yes, that's a trillion with a T. Let me correct my previous statement. It's not $1,200 to all Americans. It's to most Americans. I think you have to make under $75,000 and then you get progressively less until you make at least $100,000. So, will CCL get a bunch of this bailout money? They weren't specifically mentioned in the bailout package like passenger airlines were, but it's pretty safe to say that they will get some of this bailout money because they are a hard-hit industry from the coronavirus. Speaking of airlines, Boeing went up about 30% today. That's a massive increase. I bought some and sold some at a bit of a profit, but not as big as 30%. One reason why I think Carnival is a prime candidate to get bailout money is that one of the chairmen of Carnival Cruise Lines, Micky Arison, is reportedly a friend of Donald Trump's. And I know there's not supposed to be favoritism in terms of these bailout packages, and please do your own research to see if this is even true, but I've read numerous articles that said Donald Trump and Micky Arison have a sort of friendship, or they've at least done business in the past together. Another reason why the stock has been climbing higher is that there has been a lot of positive news about the coronavirus coming out of China, specifically from the originating city of Wuhan. Now, since this is the city that the virus originally started in, it's very promising for the future in America and the rest of the world. So while things are getting progressively worse and worse here in North America and especially in Europe, we can look at the time frame and see that in about maybe 10 months or so, it'll be better. Of course, there's no guarantee that our trend will exactly follow China's, and I'm no health expert, but this is promising news for this stock. So now that we know why the stock has been climbing higher recently, it's time to ask the question of whether it can continue to climb higher. But to answer that, let me show you my past trades first. So I've been buying Carnival Cruise Lines pretty consistently since about February 18th. This illustrates the concept of dollar cost averaging, where you buy at a bunch of different times instead of all at once. If I had bought all my shares on February 18th at about $42, that would have been catastrophic. Of course, if I had known it would drop all the way to about $8, I would not have bought at this price, but no one knows the future, and that is why you dollar cost average. I may have bought a little too much initially, with that initial order being 75 shares. I should have put about 50, but I was a little bit greedy. $42 was already pretty close to a 5-year low. It's also important to note that on February 18th, the USA was not locked down, coronavirus looked like it was going to go away pretty soon, and things were going to turn around for the company. So I bought a bunch in the 30s, some in the 20s, some in the teens, and I eventually got some at $10 and even some at $8.50. This put my cost basis of Carnival at around $20 or a little bit more, which is a fantastic cost basis. There was one sell for about $13, but this was because of an accidental double order. And as you can see, I put another sell for about 100 shares today. Looking at these past trades, it might look like, oh, it's pretty easy. You just buy at 40, then some at 30, some at 20, the teens, and then you get some at 8. That's an easy strategy to follow. But it was actually very hard, like it was mentally hard to buy the stocks at around $12, $10, and doing that final buy at $8.50, that was extremely hard. It's been going down day in, day out. You start to question your strategy. You start to question the world, the whole economy, whether it's all just gonna go to zero, and then all of a sudden it will rebound. So the question is, do I think Carnival is just doomed completely and will just keep crashing from here, and that's why I sold? Well, no, I sold a small position so that in the event it does go down, I can buy more. But if not, I'm still overall very bullish that this stock will go up. The news of the bailout and the better conditions in China are all very good factors for this company moving forward. Combine that with the fact that they do have the most cash out of all the cruise companies, and I think they will make it through this crisis. So really there are only about two things that can happen to the stock right now. It can never go lower than $16.10, in which case I'm pretty happy, I have a lot of shares, and I will just make some profits. Or it goes down to about $12 or $14. At that point I can get it at a lower price, and when it does eventually go back up, I'll make money. I don't think it'll go back down to that $8 region, but you never know in this crazy economy. But Carnival Cruise Lines is already priced for bankruptcy. So now the question is, if I didn't already have a position in Carnival, would I be buying more? To put it simply, yes I would. It is still priced extremely low. I think its PE ratio is about 3, which is insanely low, and it has the potential to go up way higher in the future. And the future has never looked brighter with the potential bailouts and the better conditions in China. Of course, as you saw, I took some profits now as the stock has gone up about 100% very recently. When stocks do that, it's unsustainable. A drop is almost certain to come. Not a huge drop, but I'm thinking a smaller drop, and I will buy more if it gets to that $14 to $12 range. I will end the video by showing my entire simulated account overall. It was up big today, about up $2,000. Its equity is about $91,000, which means I'm only down about 7 or 8%. That's amazing considering it started pretty much at the start of this crisis. It's a great feeling to see the account finally post a green day. Some stocks are actually in the green like Google and 3M, but the past few weeks and months it's just been going down and down. This was a great day overall. So if you have not already gathered, I think Carnival stock is a buy now. I do think it can come down a little bit just because it's been rallying pretty hard recently. But if you do not have a position in Carnival, I think it's a good time to start now. The promises of a bailout have never been better, and the conditions from the coronavirus seem to be getting better as well. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about Carnival stock. Let me know what you think about it in the comments below. Do you think it can only go up from here, or do you think it's still going bankrupt? As always, leave a like if this video helped you at all, and subscribe if you have not already.